Hey, what is going on? Welcome back to the channel. Today we're taking a look at Algorand, ticker Algo against Tether US. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. With that being said, let's jump straight into the daily chart. This project was requested by one of the viewers, so I decided to take a look at it, obviously. So we are on the daily chart. We do have the logarithmic scale up, and I have drawn a fib retracement from the swing high over here to these three swing lows over here, as you can see. So yeah, you can see that we hit our head on the 1.272, and we're coming back down to find support. And you can probably find support at the previous swing high, which is this previous all-time high that you can see. So we broke out. Yeah, we did test it as support one time, but now we can just come back down and have that one more bounce off that support level, because to be honest with you, the EMAs are looking a bit unhealthy. They're pretty much parabolic. The 20 EMA is parabolic. So I think it's safe to say that you're going to come back down and hit the 0.786 right now and bounce off of that as support. Obviously, that's not a 100% guarantee. That's just what I think is possible, because by that time, the 55 EMA could creep up to the 786 on the fib, and you could have a bounce at the same time from the 55 EMA and from this fib level, which would be great, to be honest with you. So $1.50, great place to put some buy orders in. If you want a dollar cost average into the project, 1.84 cents, $1.84, another great price to enter. Now, some people have been asking, what does dollar cost averaging means? So basically what it means is you don't put in all of your money at the same time. For example, let's say that you're in here, right? Or let's say you're here, okay? You want to start investing into Algo. So you put in $50, you have like $1,000, right? So you put in $100 over here. You see the project go down, you put in another $100 over here. You see it went down even lower, you put in $100 in once again. You see it went even lower, you put in another $100. You see it went lower, you put in another $100. It went higher, another $100. A bit more higher, another $100, because you're still buying lower than you initially bought this first investment that you had. You see it went a bit up, you put in another $100. And once you start getting here, your average price is going to be somewhere in here, pretty much somewhere in here. And that means that your average price is lower, which means you get more profit, you're a bit more stable, and that's just how you do it. The same way you can exit a project. So you start selling $100 over here, 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 because you're never gonna catch or guess the top. You should always kind of dollar cost average in and out of projects. So that's just what dollar cost averaging means. It means you're just averaging in your entry point, okay, or your exit point. So yeah, that's what dollar cost averaging means. So if you put in 1,000, if you would have put in $1,000 all in over here, then when you went down, you would have had to wait all this time to be in profit over here. But if you dollar cost averaged, you're in more profit than you would have been if you put in the entire, bunch of money in that one area. So hopefully that clarifies it a bit. So obviously we're looking at bounce from the 20 EMA on the daily chart. That's something that, potentially can happen. $1.84. Keep that in mind as well. Looking at long-term targets, we do have the 1.618 sitting at $3.42, and the second fib level sitting at $5. So these are our two long-term targets for Algorand. By the end of the bull market. I think these are very possible, in my opinion. Obviously, to get through that, we need to break $2.42 and $2.78, because as you can see, we hit our head, finding level of support, breaking that, hitting our head on the 1.41, going for support at 1.272, which is healthy and just organic growth. Obviously, what can happen as well is we can come back down to the 0.618, and that is still possible. So now if we started having a pullback and Bitcoin starting going for that higher 30Ks, what do you expect? You expect to come back to pretty much this swing high over here. So this is swing high. Why is it a swing high? Just so you know, a swing high is an impulsive wave towards the upside. So this is a swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. So that's just how it is. And you tend after you have an impulsive wave, after you have a swing low, swing high, the next swing low can land on the previous swing high. So we do have a swing high over here, swing high over here. So you can land on those prices, and I'm gonna give you those entry points right now. 0.618 sitting at $1.25 golden, and below that we do have the 0.5 at $1.11. So what I'm just going to do is grab a rectangle, place it like this, okay, and remove that trend line. So that's going to be your golden entry point, because if we do end up coming back down, I think that's where you might end up coming back down. Now let's jump into more technical indicators. All right, now on the weekly, we are above the 20 EMA. We're pretty overextended from it. So it wouldn't be out of the question if we went back and landed on the weekly 20 EMA. That currently sits at $1.21. So as you can see, we were overbought on the weekly chart. Now we're starting to come back down. Hopefully we can find a nice level of support and then have another bounce to the upside. Looking at the MACD, we did have the bullish cross. So if you entered with this bullish cross, you can see the appreciation you have. And the MACD is getting a bit overextended. The moving average is a bit overextended from the signal line. So you have to keep the MACD in mind because it is a lagging indicator, but you have to look at it for confirmations of trends. Now on the weekly chart, we are getting to the overbought on the stochastic RSI. So potentially wait for a move towards the downside over here, and this is where you enter. Okay, when the stochastic RSI is here in the overbought area, that's where you usually sell and you buy at the bottom. Okay, hopefully that's clear. Moving to the daily chart, do apologize if it's a bit laggy. So yeah, we're sitting at 61 on the index on the daily chart, but I still do think that there's some potential move towards the downside incoming. MACD bearish cross on the daily inbound. We do have a bearish cross. This pretty much confirms that we're going to be entering a downtrend. So potentially a bounce off the 20 or the 55 EMA on the daily chart isn't out of the question at all. The stochastic RSI has reset, however, and this is a bullish indicator on the daily chart. So we can have a move towards the upside on the daily chart and then a move down. So yeah, that's something potentially that can happen, or we can have a move towards the upside, lose steam early, and then come back down once again. That's something that you can do. But would I start dollar cost averaging into Algo right now? I would still wait. We're very overextended on the weekly. If you really want to enter and you think that it's going to go up, then yeah, start dollar cost averaging. That's the best thing that I can suggest you do, but that's not a financial advice as well. This is what I would do personally if I were to invest in the project. Okay, starting over here, you can see that we have a bearish divergence. As you can see, we made a lower high on the RSI and we made a higher high on the price action. Hence the sell-off. You can see that we're not a sell-off, but a little pullback to the 20 EMA, which is also healthy. But if you saw this bearish divergence, you would be able to get to you would be able pretty much to get to say that it's coming back to the 20 EMA. So the bearish divergence is when the price action makes a higher high, okay, but the RSI makes a lower high, okay? That's called a bearish divergence. So yeah, the 12-hourly chart, bearish cross on the MACD, and the stochastic RSI is in the floor as well. So yeah, it does seem like we might have a move towards the upside on the 12-hour and on the daily charts, but on the weekly chart, we're still retracing, okay? Like, considering everything that I just said, we can absolutely fly in the next 5 minutes after I finish recording, right? But, you have to be realistic. What a price would do if it went all this way, it has to come back down for support, have another impulsive wave, because the more parabolic it gets, the more EMAs turn vertical, the less support you're going to have once you come back to find support on those EMAs. They're vertical, you bounce off of them and you lose them as support, okay? That's what happens. So yeah, hopefully that cleared up a lot of the things, guys, you were wondering about, if you were wondering about those things at all. But yeah, look for support on the EMAs, 55 EMA on the daily, 20 EMA on the daily, 55 EMA on the 12th hourly chart, and the 20 EMA on the weekly chart are your best friends. Thank you for watching, guys. I'm going to catch you in the next one. Goodbye and good night.